Hey everyone, this is Steve Rosenberg with Mynd Property Management, and I am here with my good friend Pete Neubig, who is the Regional Director of Texas for Mynd Property Management. Pete is going to talk today about the top 3 things that you need to have to be a successful investor in Houston. So Pete, thanks for being here today.
Yeah. So Steve, good seeing you again, but also not only am I the regional director, but I'm also an investor.
Yep.
I've invested in properties, all sorts of properties since 2001 in the Houston area.
Yeah.
And let's get to it.
All right, let's do it.
Things.
All right, so first of all, what is the first and number one thing that you think has got to be established when you're going to be an investor to start this thing off right?
So not only have I found this within me and you as well, but we've also found this with some of our top clients that are successful in real estate. And I started seeing similarities between all of our top clients that are very successful in real estate. And the first thing I found was know your why. And so what I mean by that is, I'll give you an example. All right, so I have a good investor friend of ours named Scott. And Scott, what he did is every time he had a child, he would buy a property. And his why was, I'm going to buy that property, and when that child becomes 18 years old, I'm going to refinance that property, and I'm going to pay for their education.
Yep.
Okay? So that's a strong, powerful why, and it's a long-term why.
Sure.
Okay? Now, the first year you have the property, let's say that he had to evict somebody.
Right.
Now, eviction in Texas takes about 30 to maybe 90 days, the worst case scenario, 30 days, best case scenario. But let's just say on average it's two months.
Right.
Well, that's 2 months that you don't have rental income. And if you are short-sighted, you can make a knee-jerk reaction.
Because of the mental stress of getting an eviction and dealing with all that.
That is the biggest stressor on any investor.
Absolutely.
Right? So not only are you not getting rent, but you have to pay that mortgage.
Yep.
Right? There's no mortgage forgiveness because there's no rent.
Absolutely.
And so now you're super stressed. And so now you're sitting there and you're paying this note. You have somebody that's in your property. They're not leaving. Right. And so you can make that knee-jerk reaction and say, you know what? I don't like this real estate thing. It's not for me.
I'm getting out of it.
I'm going to get out of it. And now, because only about a year later, you actually lose money on a deal. And because now you are, you want to get out of this property.
Right.
So you're
emotionally
motivated seller all of a sudden. And now you're going to sell the property at a discount.
And you just have a horrible taste about investing. And it really, what's interesting about that is the 4 walls and a roof didn't change. I could buy that deal, not be emotionally attached, and make it run fine. And you're going to go, wait a second, how did he do that? I may have my why was stronger than yours, and I didn't let that emotion dictate and sway me.
It's like when you see somebody very successful, you don't realize all the trials and tribulations they went through early on. These are just trials and tribulations you're going through. And at the end of the day, the pay dirt is 18 years later.
The course corrections.
You're going to have your principal pay down, you're going to have your appreciation, and you're going to be able to refinance, tax-free, by the way, and pay for your college education for your child.
Okay.
So that's number 1. Number 2 is have investment rules.
All right.
So all of our top tier clients, and now you and I follow this because we learned
we've learned our lessons. Absolutely.
Have investment rules. So we have a client. We had a guy named Mark. Mark owned 42 properties at one point, but it was interesting that Mark had specific investment rules.
Right.
So I've taken that, and I have investment rules, and so. Again, there's so many opportunities to buy different types of real estate.
Sure. Especially in Houston.
Especially in Houston. You can go single family, you can go small multifamily, you can buy rehabs, you can buy condos, you can buy townhomes. And so
all in the same block.
Pretty much, because there's no zoning, right? Yeah. And so what I did is I established my investment rules, and they're separate from yours, and they're separate from Mark's, and they're just
they're ones that fit you for your goals and your why.
Exactly.
Yeah.
And so in my investment rules, I call my investment rules the pink elephant.
Okay.
They don't exist, right? So I have let's say it's about 15 rules. Okay. Now, you're not going to get all those 15 rules, right? Now, there's 2 or 3 that are what I call the golden rules. They're non-starters.
Non-negotiable.
Non-negotiable. So, for example, for me, it has to be at least 3 bedrooms.
Okay.
All right. And so the reason why in Houston, and I don't know other markets, but in Houston, if you have something that's a 2-bedroom or a 1-bedroom, they do not rent as quickly as a 3-bedroom or even a 4-bedroom.
And we know that firsthand because you and I have owned them in the past.
Exactly. And I also know that because we manage 900 properties in the Houston proper area. And I noticed that all of our 2-bedrooms and 1-bedrooms,
they don't rent.
They don't rent. They rent for a long time.
Right. And that may not be everywhere else, but in Houston, we know that is just something that's not going to rent.
Correct. The other thing is you have to have at least 2 bathrooms. That's a golden rule for me.
Right.
And I'll give a story. You and I owned a property in Texas City. I don't know if you remember this. And we had it rented, and they left after a year. And they loved that property. They loved the location. And I remember they calling you up like, man, why are you leaving? There was such great tenants. Like, and the guy verbatim said, man, we cannot handle this one bathroom anymore. Yeah. There's 4 of us now. There's 3 of us, you know?
Yeah, they had a family. They had a child or something, I remember.
They had 2 kids, and they had 3 bedrooms, and it was just too much.
Absolutely.
And so I wrote that, like that golden rule, like that day, right? Yeah. Because I've seen it over and over. It wasn't just that one particular property.
Right.
And I know that 1 bathrooms, again, they don't rent.
Okay.
So then what happens is, obviously, they're longer on the market, right? And so you lose money there. And then ultimately, what do you start doing when it's on the market? You start lowering your rent.
Yep.
And so you lose money there. So even when you're leasing, and even if they do,
you're making less money. You made less while it was vacant, and then you rented it for less. So it's becoming your why. Again, going back to your why starts fading as to why you're doing this. Correct. Because you have a property that is not. It doesn't match the Houston market.
Yep. Also, when you try to resell the property, it becomes more difficult.
Yeah.
Right. Because other people want, like, if it's not an investor and it's a family, they want 2 bathrooms.
Yeah.
If it's an investor, they want 2 bathrooms because guess what?
They want to rent it.
They want to rent it out quicker.
Absolutely. Yeah.
So anyway, the most successful investors that I've seen have these investment rules.
Okay.
Right. Again, I'll just give you another quick one. One of my golden rules is my single family homes have to be in an HOA.
Okay.
Right, and people say, why? HOAs are super expensive. In Houston, they're not for single family homes. Right. They are for townhomes.
Townhomes and condos.
And condominiums. Super expensive, right? But for single family homes, they're not. Now, why do I want something in HOA? Because HOAs, they're kind of pests.
They're protecting your investment, really.
They're protecting your investment. Properties in Houston that are in an HOA, they are kept up, and so those values stay or go up.
Right.
Properties that are not an HOA are not kept up, and we see property values stay or go down.
Yep.
Right, or not as up, not appreciate
as ones that are protected in the HOA. Yeah.
And the last one that's a golden rule for me, Steve, is school district.
Okay.
So for me, I go to greatschools.org. They rate all the high schools.
Okay.
So I look at high schools mainly.
Right.
And if it's not a 6 or above, if it's a 5, I'm looking at it real closely. If it's a 4 or below, it's a non-starter.
Okay.
And if it's a 6 or above, I'm in.
Okay.
And the reason why is the better the school district, the better the clientele, the better the renter.
In Houston at least, if you get above a certain level in the school district, that kind of erases a lot of challenges with a property that has problems and problem tenants and problem areas. Yeah. It just kind of is an all-encompassing swipe is what you and I have seen.
What I found is the better the school district, the better the paper.
Yes.
And what I mean that is like credit, right?
Yeah.
The better the credit, better quality resident. So you're dealing with less challenges of I can't pay you, late pay, no pay, eviction, handling your property much nicer, things like that. So, this one I learned the hard way.
Yeah.
Because you and I bought like 20-something properties in low
school district areas.
Low school district areas where we had a hard time, and those properties didn't appreciate either.
Yep. No HOAs.
No HOAs.
Yeah.
So anyway, it comes full circle. So have investment rules, and we can help you create your investment rules. And matter of fact, if you want, I can give you out mine, and you can post it out there.
Sure. Yeah.
Okay? And then the last one is know your market.
Okay.
Now this sounds like Captain Obvious, right? Know your market, but I'm surprised at how many people just want to buy something and they don't really know the market.
Right.
And you can tie this in with the investment rules, but it is a little bit different. Mm-hmm. And what I mean by know your market. Not only do I mean like, okay, what's the sales prices, right? That's pretty simple. But what's the trend? Have they been going up? Have they been going down? What kind of insurance is needed?
You just bought a property that you didn't know the market and it affected you, right?
Right. What's the days on market for sales and for leasing?
Right.
Do I need to put in a refrigerator or do I not? Like I can't tell you how many investors outside of Texas come in and because their market there's no refrigerators, they say no refrigerator in this market.
But in here you have to have it.
Meanwhile, in specific areas of Houston, you have to have and sometimes not only do you have a refrigerator, but you have to have a high-end refrigerator.
Yep.
Do you have to have granite countertops or not?
That's known in the market. And one thing that you and I know is what's very interesting in some parts of Houston, there's some streets that are requiring flood insurance and the street right next door may not require it just because of the way the floodplain is and the way it's written. So if you don't know that, same thing with wind insurance, you may have a property that you were expecting a certain cash flow. You find out it's mandatory in a certain part of Houston. You didn't realize that, and now all of a sudden your numbers are not working for your cash flow of your property.
Correct. And now that puts an extra stress on you.
Yep.
Right? Because now one of the 5 pillars is crumbled.
Yes.
With cash flow.
Yeah. So these are some things that, again, when you come to Houston or any city, but we know Houston obviously, and so you want to, again, this starts again with your why. Most importantly, why are you doing this? What's going to keep you your North Star of heading in that direction? Then it's going to be your rules of engagement of how you're going to buy the property, what your non-negotiables are, and what niceties are. And then lastly is knowing the market and understanding why you would or wouldn't buy because of a certain area, and what things would make your property stay vacant longer, what things would make your property, not get rented by the best tenants, and all those things. And it's area specific in Houston itself.
Yeah, because you might have a property that hits your investment rules, but then you put it in an area that is not you don't know the area, and it's not the right house in that area.
Right.
Then all of a sudden you obviously made a mistake.
Yeah, absolutely.
Right? And then when you make a mistake, here's the other thing: cut your losses if you really make a mistake.
Yes.
I don't say like just one eviction, no, but if you cannot get good tenants
periodically
over a period of years, then you have to cut your losses.
Yeah, it's unemotional. So again, I would add to your list, it is a mathematical equation. If the math is not adding up over time, not a knee-jerk reaction, but if it's not adding up over time, and all of a sudden this deal is just not working, it's like owning a stock. At some point, you're going to sell the stock. At some point, if the house isn't working, you're going to sell the house because the numbers are not working and it's not getting you closer to your why and closer to your goals. So this is Pete and Steve. Thanks everybody for watching. We appreciate it. If you want to find us online, you can go to mind.co, MYND.co, or you can go to our Facebook group, the Mastermind Real Estate Investment Club. You can go there, you can join, you can engage with people like me and Pete, other investors, find out about Houston or whatever city you're looking for, and you can have conversations and figure out what is best for you and maybe help you figure out what your why is. Thanks for watching, everyone. We'll talk to you later.